Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mork-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And guys, you're in the right place. If you've got questions regarding real estate, regarding mortgages, interest rates, Federal Reserve, what is going on out there in the housing market? Is it a good time to buy? Is it a good time to sell? Is the sky indeed falling as Chicken Little seems to be running up and down all of the headlines out there? And man, oh man, the headlines, oh my God, they are just clickbait, guys. We dive past the headlines into the data. And rest assured, it is not as doomy and gloomy as the news would have you believe. So we're going to dive into all of that this week. We do this each week right here, same time, same station. Again, my name is Mark-eitel. I am blessed to be the host of the Mr. Mortgage Show and really, really enjoy spending time with you each week. I am joined, as always, by my producer extraordinaire, Jen. She is in the studio, and she'll take your questions via phone call, text, or email. And you can get those questions to her via text or phone call at 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. She'll get your questions on the air. If you prefer to do it via email, just check out MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll all the way down to the bottom of the page, and there's a little email icon there, and you can click that icon and shoot the question via email. She'll get you on the air. Hey, Jen, how you doing over there? Last week, we were having some challenges with your mic. How you sounding?
How do I sound?
Man, you sound 100% better. You are definitely out of the tuna can.
Thanks for letting me out of the can, Mark.
Yeah, you're welcome. I'm glad you're out of the can. That whatever they did to the mics, you sound 100% better. So that's awesome. Hey, I don't know about you, but I'm absolutely loving the new studio. How is everything on your side over there?
I am really loving this new studio.
Yeah, we're having a blast, guys. We're almost finished with the build out of the studio, but we're broadcasting live from the Mr. Mortgage Studios and super excited to be here. We have some new improved technology, and yeah, it's only going to get better. So anyway, guys, we're going to dive right in. But again, questions or comments, shoot them to us via text or give us a phone call at 855-462-7292, 855-462-7292, or via email. And you can do that at MrMortgageRadio.com. Scroll all the way to the bottom, MrMortgageRadio.com. And there is an email icon there. You can shoot us your question that way too. But hey, let's dive right in. You hear me all the time poking fun at the headlines, and it's not hard to do. It's really gotten out of hand. Every headline seems to be like a clickbait Facebook post anymore. And I don't know how many times you have been scrolling through social media and you'll come across a post or a video that says, watch until the end. You won't believe what happens, and you won't waste, 90 seconds or 2 minutes of your life, and nothing happens at the end. It's crazy. They're swirling paint around on a table and then put some cheesecloth and more paint and then some spray paint, and they pull it off and nothing happens. And then that's 90 seconds or 2 or 3 minutes of your life you're not going to get back. Well, the headlines are the same way, and I grabbed one yesterday. I just wanted to share it with you. So a big headline said mortgage refi demand surges as homeowners take advantage of lower rates, right? That sounds amazing, right? Big surge in refi demand, big fall in rates. I mean, just that alone gets you excited when you read that headline. But when you read the data, they talk about rates falling sharply. That was a sub-headline, if you will. And the rates fell from in this data set, from 6.58 to 6.43. So that's 0.15%, just a bit more than an eighth of a percent. Now, I don't know in your world, but an eighth of a percent is not a sharp fall. It's a downturn. Maybe a click down, slight easing. Maybe I would have used that terminology, but not a sharp decline. And then as far as that demand surging, that big headline, demand surges. Well, refi demand was up 5% month over month. Now, we were coming out of a pretty high interest rate environment, but still, that's a nice increase month over month. but the overall demand for refis is down 86% from last year. And if you combine refis and purchase mortgages, applications were up 1.2%. So my point is a 1.2% increase isn't a surge, and an 1/8% decrease is not a sharp fall. And the reason I'm sharing that is if you just read the headlines, good or bad, because this is good news in the world of finance, right? That's great news that rates have come back down a little bit, that mortgage applications have increased. If you're sitting on my side of the microphone, that's encouraging news. But even in the face of good news, they can't just deliver the news. It's got to be this big clickbait and over dramatize. And they're doing it with the quote unquote bad news in the market. They're talking about housing appreciation slowing, prices coming down, yet year over year numbers are still up. And they're talking about demand is cooling, which it is, guys. Absolutely, it's cooling, but so is supply. Fewer people want to sell in this environment. And yes, supply is increased a little bit. The reason I'm sharing all of this is not to necessarily bash the news, but it's just to give you the rest of the story, if you will, a more concise look at it. Look at the data. And if you would have just scrolled past that headline and called your bank or called your mortgage guy and he quoted you, a rate in the mid to high sixes, you might say, wait a minute, I just read a headline a day or two ago that said rates fell sharply and demand is surging. I should be getting a better price. Of course, people are confused because the headlines are confusing and they're not giving us the whole story. So, and I don't know how many people have ever dated online. If you've met your spouse or even tried to meet somebody online, that's how I feel like the headlines are, right? Fit 40-year-old guy, owns 3 companies, picture of him with the Porsche convertible in the background. And then you, as a lady, go to meet this gentleman at the bar, and he looks nothing like his photograph, and that was not his car. He was just in front of the Porsche dealership as he slides his Kia keychain up on the bar to meet you for a coffee or a cocktail. So that's kind of how I feel about the headlines. Enough poking at the headlines, guys. If you have questions or comments or you want to dig deeper on any of the data, you can call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Or again, as I mentioned, you can shoot your questions via email and just go to mrmortgageradio.com, scroll to the bottom. There's the email link. But yeah, we're going to dig into all of that this week. There's some encouraging news in the market. I know all of the data that we talk about is always lagging. But the November new home sales were up. Days on the market in most of the markets that we serve are still relatively low, meaning that there's still a lot of activity in the market, albeit less than pandemic levels. But nonetheless, we're still seeing plenty of demand and plenty of opportunity in the market. And we're seeing a lot of people that have interest in buying rental properties right now because of what's happening in the rent market. So we're going to talk about that too. The landlord loan and the ease in which people can now become landlords. It's quite amazing at some of the loan products that are out there. The rent increases are still supporting sensible decisions for becoming an investor in a lot of markets. So we're going to dive into that too, but we're going to cover all that and so much more. We're going to dive into your questions. Sit tight. You hear the music. You know what that means. That's my cue. We'll be back in a few. On the other side of this break, we're going to dive into more of the data and start taking your questions. Hey, it's Mark-eitel here, and I am going to interrupt this commercial break to ask you for a favor. If you've got any friends or family or coworkers who are talking about buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me and my team. You can simply share the link, Mr. Mortgage Radio. That's mrmortgageradio.com. I'd welcome the opportunity to help them any way we can. Now sit tight. On the other side of this break, we'll be back with the show. Again, it's Mark-eitel, NMLS 1929005.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned into the Mr. Mortgage Show. And guys, we're super excited that you're spending a bit of your day with us. It's always our goal to give you the data and the info that you need to make better real estate and mortgage decisions for you and your family. And if you've got questions, feel free to give us a shout or shoot us a text via the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. And Jen, my producer, will get your questions on the air. That's 855-462-7292. Affectionately known as the Anytime Hotline, because when we're not in the studio bringing you all this mortgage magic, that pushes to my office. So you can use that hotline anytime, 855-462-7292, or as always, MrMortgageRadio.com, and scroll to the bottom and shoot us an email via that email link. But hey, let's dive right into your questions. They're always my favorite part of the show. I know Jen said we've got some questions ready. So, hey, I'm going to throw it over to you, Jen. What do we have?
Ed is asking, does an 8.5% interest rate sound right for an equity line? My bank is quoting this. Are there better options?
Hey, Ed, that's a great question, my man. And right out of the box, I'm going to say yes, that sounds about right. So most equity lines are based on the prime interest rate, and that interest rate is directly controlled by what the Federal Reserve does. So the Fed's been raising interest rates consistently at every meeting. So prime is now suddenly 7.5%. And your question is not uncommon. That interest rate is surprising a lot of people. So the way the equity lines are typically priced, it's based on your credit score and your combined loan to value. So let's say you've got let's make this easy math for my old tired brain. Let's say you have a $200,000 property and you have a $100,000 existing mortgage. So you've got a 50% loan to value. And let's say you want to take a $50,000 equity line. So you're going to have a combined loan amount of potentially $50,000 in the equity line, $100,000 on the first mortgage. So your combined loan to value is going to be 75%. So that combined loan to value, that CLTV, as we call it in the industry, and your credit score are going to control pricing. And typically what you'll see, the lower the CLTV and the higher the credit score, you might get quoted an interest rate of prime minus a point. sometimes prime minus a point and a half, or an introductory rate of as low as prime minus 2 points, which would put you at a start rate of 5.5 today. Or we're seeing prime plus, and all of that's going to be dictated by that CLTV and your credit score. So it's not uncommon to get a rate prime plus 1, prime plus 2. We're seeing prime plus 4 in some instances. So it's interesting, right? Because a year ago, 18 months ago, the equity line was a no-brainer because interest rates were so low. You were getting equity line rates of 1%, 2%, because prime was in the threes. So a lot of people were taking equity lines to pay off, credit cards, car payments, whatever the case may be, and then just taking that interest-only period for the equity line and trying to pay that off as quickly as possible and reducing your overall interest costs considerably. That was a great strategy. Well, now you're finding out that you're walking into a world with an 8 or 9 or 10% equity line interest rate, and with a mortgage refi rate in the 6s or buy it down into the 5s, hey, we just talked about it in the opening segment. That headline alluded to people looking at refinancing, cash out refinancing as an option again. And part of the reason is because equity lines have gotten expensive. The perception of it, rather, is that they're expensive. It's still relatively affordable interest for what the loan product is, but that's a whole nother story. But to stick with your question, that's not an uncommon interest rate for an equity line right now. You might want to consider looking at a cash out refinance if you truly want to pay down some debt and reduce your monthly expenses. I guess we should touch on that. There's two schools of thought with equity lines. Some people are using them as, emergency funds, if you will. And the idea is just to get it, put it on the shelf, and if you need it, it's there. Awesome, awesome strategy, because here's a situation. What happens if you lose your job, or what happens if something significantly changes in your credit profile and you no longer qualify for that equity line? No matter how much equity you have in your property, you're not going to be able to go get it. So when the emergency comes, it's then hard to go qualify for any new debt, where taking that equity line now, because the costs are typically low, getting an equity line from the bank, and you don't pay unless you use it, right? So you could have an available balance sitting there, never draw against it, and not have to make a payment. So taking it as a rainy day fund, I think it makes a lot of sense, because emergency money, regardless of the interest rate, makes sense if you need it. The other school of thought is taking out that equity line to pay off, a 24% credit card or a 14% RV or boat interest rate. In that instance right now, the equity line rates are becoming a bit higher, to the point that it's starting to make sense to say, okay, my current mortgage rate is 4, but if I refinance, cash out, and pay off all this high interest rate debt, and I get a rate in the 5s or 6s, am I truly saving enough money each month for it to make sense? So those are the schools of thought around an equity line. I hope that answers your question, which was, is this a normal interest rate, or the average interest rate, if you will, of the day? And it's what we're hearing. I had an interesting conversation this week with a friend of mine who's the VP of a fairly large regional bank in the Southeast. And she and I had coffee together, and we were shooting the breeze, and they're tightening up all of their consumer loan products. So their personal credit lines, their car loans, everything, even their business lines of credit. They're requiring higher credit scores, and they're lowering the amount of available credit. So it's interesting to see some of the consumer banks tightening some of the guidelines around credit, anticipating that we're going into a bit of a recessionary period where the consumer might struggle a little bit. So if any of that is indication as where we're going in the future, it might make sense to do that equity line and just have it if you need it, or look at that cash out refi strategy. But brilliant question. I appreciate it. I hope that helps. If you need more information around that or would like a deeper conversation, you're always welcome to give us a call, 855-462-7292. That rings to my office when we're not here on the air. But guys, you hear the music, you know what that means. That is my cue. We'll be back in a few. Sit tight. On the other side of this break, we're going to dive into more of your questions. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are tuned into your very favorite real estate mortgage show, the Mr. Mortgage Show. Guys, we do this each week right here, same time, same station. I say that, but I'm hoping that we become your favorite show if we're not already, because this is my favorite real estate mortgage show. I can assure you of that. But hey, I'm joined as always by my producer, Jen, and she'll get your questions on the air. And I know we've got some stacked up, but if you want to get your question in the queue, just call or text 855-462-7292. That's 855-462-7292. And I'm going to go ahead and throw it over to her right now, and let's keep your questions rolling. Hey, Jen, what do we have?
Maya sent this one. How low can we buy a rate down to? Is there a maximum amount? Also, how much does it cost to do a buy down?
Hey, Maya, that's a brilliant question. So there's not a quote-unquote maximum amount that you can buy your rate down, but there is a maximum amount of fees that you can pay associated with a mortgage loan. And all of that changed post the housing crisis of the early 2000s and the market crash. And, you know, the rules for mortgage lending were rewritten to protect the consumer. So when you're trying to buy the rate down excessively because of the costs associated with it, oftentimes you will hit a threshold where you are now exceeding the maximum amount that you're allowed to pay, or I guess the maximum amount you're allowed to be charged for originating a loan, and that's where you typically run into an issue. It's not a rule about how far you can buy the rate down. It's a rule about how much you can be charged in fees. But to answer your question, how much does it cost to buy the rate down? There's a big misconception out there that you hear the term discount points, right? Which is 1% of the loan amount. And I can't tell you how often I see real estate agents on TikTok and Facebook and Instagram And there's some brilliant people out there sharing some really, really valuable news, but there are also a lot of people out there that have no business sharing their insight because they're way off base. But anyway, I can't tell you how often I'll see somebody post that if you pay 1 point, you can buy your interest rate down 1%. And guys, that's not the case. If that was the case, a 3 or 4% seller contribution could buy you a 2% interest rate, and you'd be seeing that all over the news, and that's just not how it works. Typically, one discount point, right, 1% of the loan amount, so a $300,000 loan, 1 point is $3,000. Typically, one discount point will buy the rate down between a quarter and a third of a percentage point. So 3 to 4% of the loan amount will lower the interest rate by 1 full percent. Now, that differs by lender and differs by day because it's all influenced by market pricing, the cost of money that particular day. But that's the rule of thumb. So if you can get a 3% seller contribution and that use 3 discount points, you could get your rate down to 0.75% lower than the quote-unquote par rate of the day. So if you want to talk about specifics, I'd be happy to address that for you. Just give us a shout or shoot me an email and I can answer that in more detail. That's a pretty good rule of thumb. It's not a 1-to-1 ratio by any means, and don't be misled by the king or queen of TikTok who may have the wrong information out there. Even though they're well-intentioned, it's a big misconception. So anyway, great question. I hope that helps. And again, I'm happy to dive deep with that if you need more info. Hey, Jen, do we have another question?
Elisa sent a text. We just got an offer on our house. They offered $10K over our asking, but want us to give the $10K back to the buyer as a credit. Is this allowed? What if the house appraises for a lower amount?
Yeah, that's a great question. That's actually quite brilliant question because we're seeing a lot of that right now. Most of the time, it's the seller willing to take a reduction in the sales price. So instead of reducing the price or reducing the contract amount, they're keeping it at the list price, but then that difference is being contributed back as a seller contribution, or sometimes you'll hear it referred to as a seller concession to buy down the interest rate or to help with closing costs. So it is allowed. Absolutely, it is allowed. And it's done every day. Here's the interesting part of your question, though. They went over your asking price with the intent to get that money back. Now, that will work assuming the property appraises. And you alluded to that in your question. What happens if it doesn't appraise? If it doesn't appraise, you're back to the drawing board. You have to renegotiate the deal unless the buyer has waived the appraisal contingency. And it's unlikely that they've done that if they need that seller contribution to make the deal work for them. So if it doesn't appraise for the higher value, then you're going to have to renegotiate the terms of the deal. But to answer your question, I know it seems fishy, right? I guess I hate to use that word, but it seems a little peculiar that someone would offer you more and then ask you to give it back. But as long as the property appraises, then that will work. So oftentimes you'll hear appraised value or purchase price, whichever is less, because that's what the lender's looking at. So in this case, the appraised value would be less than the purchase price. So everything would be adjusted down based on the actual value of the property. So hopefully that helps. That is a brilliant question. But we see a lot of that. So seller contributions, however you get there, are certainly allowed. But you're going to need, that property will definitely need to hit the higher value. So great question. Hey, Jen, what else do we have?
Here's an email from Thomas. What happens to the reverse mortgage credit line if our home's value goes down?
Hey, Thomas, that is a brilliant question. We're running up to the break, so I'm not going to dive deep. But to answer your question, nothing. That's your money. Regardless of the value of the property, that money is there for you. And just so everybody knows, the reverse mortgage is non-recourse. So if the property value goes down and you end up owing more than it's worth at the time of your death, and it's, what you're alluding to, what happens if property values go down, your heirs aren't responsible for that quote-unquote negative equity. They just slide the keys back to the bank. It's a non-recourse loan. And in the case of your question where you've got that credit line, if you will, available to you, it's not reduced when the value is reduced for that very same reason. The loan's already closed, the amount has been agreed upon, and that is non-recourse. So you are good to go, my man. That money is still yours. And that's a very, very good question. And you're obviously thinking forward regarding what's going on in the market and in the economy. So brilliant, brilliant question. I love that reverse mortgage product. You hear me talk about it all the time. It's not right for everybody, but the person that it's right for, it is truly life-changing. And guys, if you want more information about a reverse mortgage, visit moreaboutreverse.com. That's moreaboutreverse.com. It's a very simple landing page. There's a little video. It's me. I'm terrible on camera, much more comfortable on the radio, but I do my best to answer some of the most common misconceptions, if you will. And then there's a little box there where you can provide some of your information, and we'll send you a full package out so you can take as much time as you need, read everything, get comfortable with it, and we are always open to discuss any questions that you have. No pressure. We're happy to give you all the info you need to make the best decision. So I certainly appreciate that question, and I'm happy to help any way that I can. But guys, you hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here. Same time, same station. I was going to say same bat time, same bat station. I don't know why I froze up there. But anyway, I am joined, as always, by my lovely producer, Jen, who is womanning the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. You can call or text your questions, your comments, whatever you'd like. You want to harass us, just do it via 855-462-7292. Or as always, check out MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll all the way down to the bottom of the page, and there's a email icon. If you click that, you can send Jen your questions via email, but she will get your questions on the air. And guys, we've had some brilliant questions so far. We talked about what happens in a declining market to the reverse mortgage. We talked about equity line interest rates. We talked about buying the rate down. There's been some good stuff. So let's keep your questions rolling. That's my favorite part of the show. Hey, Jen, what do we have?
Derek is asking, I saw a few houses advertised with legal ADU income opportunity. What is this? A special loan program?
Hey, Derek, that's a brilliant question, brother. And I appreciate you bringing that to our attention because ADU is like the new acronym of 2022, if you will. That's like the latest buzzword. ADU stands for accessory dwelling unit. And in the town that I grew up in as a kid, they were called mother-in-law suites. It's typically a detached structure on the property that can be rented out, that can legally be rented out. So sometimes there'll be a converted garage, for example, that's rented out, and that wasn't done with permits. It doesn't meet the requirements of a legal ADU. So ADU means accessory dwelling unit, and legal ADU just simply means there's rental income on the property. So brilliant question. And yes, you can buy a property with a mother-in-law suite, or I think in England they call them granny flats. I don't know if that's politically incorrect anymore, but it's essentially a second unit on your property. It's not a duplex, but think of the converted detached garage, or as I mentioned, where I grew up down in Palm Beach County, Florida as a kid, a lot of the properties had those detached guest cottages in the back. So anyway, great question, Derek. Hey, Jen, do we have another question?
Joanne sent this text. I'm recently divorced and don't have any recent income or work history. I think I remember you mentioning a mortgage that will work in this circumstance. I searched your podcast but couldn't find it. Can you explain this again?
Hey, that was Joanne. Hey, that's a great question, Joanne, and thank you for paying attention in class last time because it was a couple of shows ago, I think we talked about that. And also, too, thanks for checking out the podcast page. I am sorry that you didn't find that episode, but guys, if you want to listen to back episodes of the show or some of the Daily Dose podcasts, check out MrMortgageRadio.com. That's MrMortgageRadio.com. And there is a link on top of the page that will take you to the podcast. But brilliant question. I appreciate that. We were talking about no ratio loans and then the non-QM loan product that is called Ability to Pay in Full. And basically with either of those loan products, if you've got the cash, and we use the example of a recently divorced couple that I was talking about last time, where the wife's divorce settlement left her enough money where she could have paid cash for the property, but naturally she didn't want to tie all that money up in the house. So either one of those loan programs will work in that instance where either you're able to pay in full, that's the non-QM product, and I can't pronounce the acronym, so I'm not gonna attempt it, but that's one option. And then the no ratio option is typically requiring a 25% down payment and then somewhere between 6 and 24 months of reserves. And reserves are simply enough money to live for 6 or 24 months, depending on the program. And the reason I say that is depending on your credit score and the amount of the down payment, it could be as little as 6 months reserves. The next increment is 12 and then 18 to 24 months. So that's how the reserve requirements step up with that particular loan product. But those were the two that we were specifically talking about in this instance. So I hope that helps, and I welcome the opportunity to have a deeper discussion with you. If you need it, give us a shout, 855-462-7292. We would be happy to help you. And guys, if you're curious if we could help you, my new thing is, if you can hear my voice, we should be your choice, or we could be your choice. I'd like to think we should be. Yeah, we are now serving all of the areas that the show is being broadcast in. So super excited about that and would appreciate the opportunity to have a discussion if you are interested. But I appreciate that. Great question. Hey, Jen, what else do we have?
Brenda is asking, why is my bank telling me I need to pay for my insurance up front? I thought it was part of the payment. Seems like I'm paying twice. What am I missing? Wish I had known about you sooner.
Hey, Brenda, that's a great question. And that's a place a lot of people get wrapped around the axle, right? So it's not the bank's fault. Here's how it works, right? You're going to pay that first year's policy up front, whether it's us or whether it's your bank. It's just, it's how it works. And then each month you're making 1/12 of the insurance payment is part of your payment that goes into escrow. So let's use round numbers and say your insurance policy is $1,200 a year. And you close in January, which means the next January, the bank's going to have to renew that policy, and your payment each month is putting 1/12 of that amount into escrow. So when that renewal period rolls around, there's enough money sitting there to pay it. So it feels like you're paying it twice, but you're not. You're paying that 1 year up front. Then you're prepaying, if you will, in increments with each monthly payment, and they pull that off to the side and put it in the escrow account so that they've got enough money to pay your property taxes when they come due and your insurance when it renews. So I know it's super confusing, and you get right down to closing and it feels like everybody is in your pocket, right? It feels like all of these hands are sliding into your pocket or your purse because, maybe we should talk about that one time. We'll talk about closing costs versus cash to close versus down payment, because there are 3 or 4 buckets of fees, if you will, that go into what equate to your cash to close. And prepaying your insurance, prepaid interest, and setting up your escrow accounts are some of those numbers that catch everybody off guard. But that was a brilliant question. I certainly do appreciate it. So I hope that helps. If you need more information, you can reach us at 855-462-7292. That's 855-462-7292, or check out Mr. Mortgage Radio. But guys, you hear that music? You know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this break. We're going to come right back with more of your questions. We'll be here. Hope you are too. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And guys, you're in the right place if you've got questions regarding, is it a good time to sell? Is it a good time to buy? Should I refi? Should I HELOC? Should I just grow vegetables in my backyard and fill my bathtub with water because the end of the world is coming? Guys, exhale. The end of the world's not coming. It is our goal to give you the information, the tips, the tricks, the strategies, and the real data. You hear me say it all the time screw the headlines. They're clickbait. Let's dive into the data sets and really dissect what's happening. So it's our goal to give you that info so you can go out there and make better real estate and mortgage decisions for you and your family. And if you've got questions or comments, please give us a shout. Shoot us a text, 855-462-7292. 855-462-7292. That is the Anytime Hotline. Or check out MrMortgageRadio.com. That's MrMortgageRadio.com. And you can send us your question via email. Scroll all the way down to the bottom. You'll see the email link. And you can shoot your questions that way too. And while you're on that page, check out the podcast. Check out the Facebook page. Watch all the silly videos that I do. And guys, be easy on me because I have the, what do they say? A face for radio for sure. But, I'm a ham. I'll get in front of the camera too. I'm just much better on the radio. So anyway, guys, you hear me weeing all the way down the road. That means Jen is in the studio with me. We do this each week, and I'm blessed to have her by my side, and she will get your questions on the air. She is womanning that Anytime Hotline, 855-462-7292. But I know she was letting me know during the break that we do have some questions queued up, so I'm going to throw it over to Jen. Hey, Jen, do we have any? Okay, what do we have?
Candace sent this text. Where is the best place to find foreclosed homes for sale? When I Google it, I just get a bunch of real estate agents popping up.
Those pesky real estate agents. I'm kidding. Hey, speaking of real estate agents, if you guys need a really great agent, I'm proud to be part of the Really Great Agent Network, and we can get you in touch with an agent that we have vetted in your area. Nationwide, we've got an amazing group of agents, and these are people that their heart is in serving families. They're not competing for the biggest number of sales. We say here in the Mr. Mortgage team, we serve families, not files. And the Really Great Real Estate Agent Network is built around that principle. So if you need a good agent, check out reallyGreatAgents.com. And we'll be happy to send you a list of agents in your area that we've already vetted or that we've done business with in the past. Anyway, got that out of the way. So, yeah, a lot of people are preparing for this big wave of foreclosures. I'm not convinced they're coming. You've heard me talk about it before. I think a lot of people have a ton of equity. They would sell far before they would ever get into a foreclosure situation. But great question. And people go into foreclosure all the time. So there are always some properties available. I just don't think there's a tidal wave of foreclosures coming. But that being said, let me answer your question because it is a good one. So if you're looking for FHA foreclosures, HUD, H-U-D, HUD Home store.com. And I know it sounds like a silly name, but that's the legitimate website that HUD runs for the liquidation of their foreclosures, hudhomestore.com. And typically how the HUD foreclosures work is they'll reserve the bids in the beginning for people who want to occupy the home as their primary residence. These are FHA loans that have gone into foreclosure. So they prefer that it be another primary residence property. So someone who's going to live in the home themselves is who they prefer to sell that property to. If they don't get adequate bids within whatever time frame they determine, then they'll open it up to all bidders, including investors. So check out hudhomestore.com. There's usually some good finds there. And then surprisingly enough, super simple name, but a lot of the large lenders and servicers use auction.com to liquidate their foreclosures. So again, I don't think there's a ton of inventory coming in that channel, but it's a good place to keep your finger on the pulse. So hudhomestore.com and auction.com would be two places I'd be watching if I was you. But brilliant question. And if you need information on how to use a mortgage to buy a foreclosed property, you can always give us a shout or shoot us a text, 855-462-7292, or send us an email, and you can find our contact info at mrmortgageradio.com. I'll be happy to talk to you about how to use a mortgage to buy a foreclosed property. But anyway, brilliant question. Hey, Jen, what else do we have?
Lisa has this question. A neighbor offered to buy our home but wants to do a wrap-around mortgage. I don't fully understand what this means. Can you explain? What are the risks to me as the seller? Thank you very much.
Hey, that's a great question. So You're going to hear a lot of that moving forward, right? So wraparound mortgage is one creative financing strategy, if you will, that buyers might present to sellers. Another is called subject to. They'll buy the property subject to the current mortgage. And we'll talk a little bit about both of them. Both of them are going to pose challenges in today's environment, though, because with the wraparound mortgage, let me start there because that's your question. Usually what happens in the case of a wraparound mortgage is you're keeping your mortgage in place. You're selling the property to the buyer who's giving you a down payment, and you're typically charging them a higher interest rate and you're holding a mortgage. So they're making a payment to you and you're making a payment to your bank and you're pocketing the difference as profit. Now, on the surface, that sounds like a great opportunity. Here's the challenge. Most residential mortgages have what's called a due on sale clause. And I know there are investors out there right now driving down the street, screaming at the top of their lungs, telling me, yes, but nobody invokes the due on sale clause. Nobody exercises it. I'm not going to get into that argument. They could. So once you sell that property, you could be required to pay that loan, your mortgage that you used to buy it in full, because that due on sale clause states that you have to pay the mortgage in full if the property is sold. So that's one area to be aware of. You would definitely want to make sure that's allowed by your lender, because now there's a junior lien, if you will, with the wraparound mortgage. So think about the wraparound mortgage exactly how it sounds. You're paying your mortgage to the bank, but that the buyer's mortgage is wrapping around that and they're paying you. So, and the risk to the buyer is if you don't pay your mortgage, it goes into foreclosure. That's the senior lien. They're out of luck. So, interesting situation. The other is buying your property subject to your mortgage, and people will say, hey, I'll give you a down payment, deed the property to me. You won't have to pay real estate commission. You won't have to pay closing costs, but I'm going to take over your mortgage. I'll make your mortgage payment for you. Now, unless they assume your mortgage, meaning the lender approves them and the mortgage is now in that person's name, you're still on the hook. So selling your property subject to the mortgage stays in your name, right? The bad stuff, the debt, the obligation, but the property is transferred to the new owner. Again, problems with the due on sale clause. And then secondly, if they stop making your mortgage payment for you, you go into foreclosure. And we saw that happen in the early 2000s with the housing bubble burst and the correction. A lot of people were desperate and they were selling their property any way they could. And there were some devious people who were doing that subject to strategy, and they were buying the property and never making a mortgage payment, and those sellers went into foreclosure after all. So anyway, there's a lot of conversation around that, and I'd welcome the opportunity to have a deeper conversation with you. Just give us a shout off the air at 855-462-7292. But hey, Jen, can we squeeze in another question, you think?
Rick sent this one. Is there an easy way to figure out how much faster we can pay off our loan by adding an extra $200 per month? That's what I do.
Hey, see that, Rick? You and Jen have something in common. She is prepaying her principal too at a rapid pace, mind you. So she has learned a lot hanging around the Mr. Mortgage team. But there's not a simple rule of thumb because it's going to be predicated on your interest rate, predicated on your loan balance. There's a lot that I would need to know to answer that question. But here's the thing. I'll be happy to send you a calculator. So I'll send you an Excel calculator where you can fill in all those blanks for yourself, and you can see how quickly you could pay it down with a $200 surplus, a $300 surplus, incrementals, occasional pay downs. You can determine all that by using this calculator. So go to MrMortgageRadio.com, scroll all the way to the bottom, shoot me an email, and I will get you that information. But that was a brilliant question, and adding additional principal will build equity faster. So ask Jen, she's doing it. Hey guys, you hear the music? You know what that means? We have wrapped up another week of the Mr. Mortgage Show. Man, oh man, where does the time go? I'm hoping I'm not the only one having fun, but in my chair, time flies by because I'm having fun. So guys, thank you so much for spending a bit of your day with us. We are truly blessed and honored to share your company. I hope we answered some valuable questions and got you some info that you needed. As always, if you need us, during the week. In between broadcasts, you can reach us at 855-462-7292, or all our contact info is at MrMortgageRadio.com. That's MrMortgageRadio.com. Hey, Jen, want to say goodbye to the folks?
Have a great weekend.
Have a great weekend indeed. Guys, we'll see you right back here next week. Same time, same station. Bring a cold one. Bring your questions. Be ready. We'll be ready. Look forward to seeing you then. Have a fantastic week. Talk to you soon.
Hey, it's mark-eitel here, and I am going to interrupt this commercial break to ask you for a favor. If you've got any friends or family or coworkers who are talking about buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me and my team. You can simply share the link, Mr. Mortgage Radio. That's MrMortgageRadio.com. I'd welcome the opportunity to help them any way we can. Now sit tight. On the other side of this break, we'll be back with the show. Again, it's Mark Eitel, NMLS 1929005.